Good morning, hello and welcome to Market Today on Business Today Television. This is Shail Bhatnagar joining with you from the capital New Delhi. It's T-1 as far as the Nifty is concerned, and we are just a day away from the F&O expiry for the month of October. It's been a bit of a carnage when it comes to stock trading. Day before yesterday, which was Monday. Yesterday was of course a holiday, and there is a massive dip in sentiment as far as bulls are concerned on Dalal Street. But all that and more we'll discuss after the headlines. Beaten down Indian stocks are likely to see short covering ahead of October's F&O expiry as bears book some profit booking on easing crude oil prices, and a few brave investors attempt bottom fishing in a market trading at 4-month lows. The mood in the bull camp is glum. Stocks that rallied the sharpest, the PSU basket, will continue to face the heaviest profit booking as stretched valuations and overstretched technical charts attract prowling bears to punt lower. Extreme caution is advised. Good morning, ladies and gentlemen. Once again, this is Shail joining with you from the capital New Delhi. While the weather in North India is getting better and better, the same can't be said for the weather on Dalal Street. A lot of heavy selling was witnessed on Wednesday, and let's look at the chart for the Nifty. Right in front of you is the daily chart as far as the index is concerned, and we see continued weakness. The Nifty actually closed 261 points lower at 19,280. This was the lowest for Monday and the lowest as far as the Nifty is concerned since June 30th. So we are sitting on a 4-month low, and that is a bit of a issue as far as the markets are concerned. Let's drill a little deeper and see where the markets are headed. The Nifty's trend is absolutely down. Indian stocks have finally caught up with the geopolitical risk of virus, and this comes against the backdrop of weakening 10-year bond yield, which is down for the 4th day in a row. Remember, the Indian markets will now react to 2 days of US Wall Street, but the fact remains that the sentiment on Dalal Street is very weak. The only ray of hope that I see is that over the last 2 sessions, that is on Monday as well as on Friday, there was a bit of foreign institutional buying. So these lower levels are definitely attracting seasoned investors, and we saw about 2,000 crore coming in as far as cash stocks are concerned. Now, since we are on T-1 and tomorrow is the monthly expiry for October, we are going to see some kind of short covering happening in today's trade. Remember, the cues coming in from Wall Street, the cues coming in from Gift Nifty seem to be on a positive note, and that's how at least the first initial 1 hour of trade is likely to be. A nice bounce back is expected because of short covering and the fact that some bears will book profit after a sustained fall on Monday. Let's look at some other charts that you see on the screen, which is the US 10-year yield. It's been dipping for the last 4 days. Crude oil and gold futures continue to exhibit resilience and strength. So that's a bit of a negative as far as the Indian markets are concerned. But overall, the trend on the Nifty is weak. If you see Monday's figures, there were only 2 gainers as far as the Nifty 50 stocks were concerned, and those were Bajaj Finance and Mahindra. Amongst the 10 index heavyweights, none of the stocks show any kind of long build-up or short covering, and there is a persistent weakness when you look at the Nifty chart. In fact, 32 Nifty stocks on Monday showed long unwinding plus build-up of shorts. So that you can imagine how the sentiment for Monday is as far as the broader markets are concerned. So a bit of a short covering in initial moves, and then you'll see a sell on rise again coming back. If you see how the Nifty options charts are, a strong support is seen at 19,100 and 19,000, but Let's see whether that holds or not. It's a falling knife. The last 1 hour of trade on Monday was terrible as far as bulls were concerned. Sustained selling, sustained option writing was seen by bears, and that's a bit of a pain that will get reflected once the initial burst on the Nifty gets over. So sell on rise intraday is the best strategy. You'll see volatile choppy trade today. There is no need to extend long positions. That's still far off as far as the Nifty is concerned. And the fact that you've had about 2,000 crores worth of FII buying, that's the only consolation as far as the main index is concerned. But beyond that, weakness persists. Let's also look at the bank Nifty. The trend again here is down. The index closed below 200 DMA as far as the bank Nifty is concerned, and this is the lowest since May of 8th. If you look at how the bank Nifty has performed in the month of October so far, it's down 3.3% as far as bears are concerned, and of course it's below 200 DMA on Monday's trade. So a lot of short build-ups are seen, and the first support level now as far as the bank Nifty is concerned is at 42,500 when it comes to the index. Let's look at the broader markets as well. You'll see a lot of crude charts, you'll see the gold chart. So all of them are sort of sideways to strong after a very, very strong rally that you've seen all of last week. Gold moving up from $18-22 an ounce to more than $2,000 an ounce, and that's the rally that's being digested. Safe having buying been seen all around as far as markets are concerned. So that's how the setup is as far as daily trading is concerned, and the fact that there was considerable weakness. I'll give you a statistic. If you look at the Nifty as a whole on Monday, there were just two gainers. Mahindra and Mahindra up 0.3%, 1562, and Bajaj Finance 0.2% up 77.97. So this is how the markets were structured. Heavy profit booking seen in banks. ICICI Bank was down 0.5%. IndusInd Bank was down 2.5%. In fact, it was the PSU basket that saw intense selling pressure, intense profit booking, and that remains to be seen over a period of time. Let's also look at how other markets are trading, and the fact that you have seen a mild uptick coming across the Nikkei. That's because you saw the Dow Jones, the Nasdaq bounce up fairly well on Tuesday's trade. So those are the minor positive points that might get reflected on the Nifty in initial trades, but that's how the overall structure is. You'll see a sell on rise coming in very effectively when markets trade beyond the first hour. The Nifty on its way down has lost 1.3% on Monday, and as far as the month is concerned, it's down about 2%. So that's the weakness that has crept into the markets, and today and tomorrow will be a day for rollovers. It basically means how futures are getting rolled over the next month, whether on the short side or the long side. This is how markets are structured at the moment. We'll be joined by Gaurang Shah shortly, as also with the other viewers, and then we'll discuss how the trade is structured. Overall, if you look at the monthly charts of Nifty constituents, the maximum gains have come in the auto space, and led by Bajaj Auto, about 7.5% higher still on a monthly basis, and that's enough strength to take it beyond 5,500. But over the next 2 or 3 days, while we'll see a lot of festive demand creeping into the market, it is likely that some kind of profit booking will be happening. On a monthly basis, as far as the Nifty is concerned, Bajaj Auto, Nestle and Hero Motors are the top gainers, up between 5.8 and 7.5%. It's the Adani twins, Adani Enterprises, which is down 7.3%, and Adani Ports down about 7%. These are the top two losers as far as the Nifty is concerned. And of course, banks. Axis Bank is down 6.8% on a monthly basis. State Bank of India down about 6.5%, and Tech Mahindra down 6.3%. So it's the defensive part of the market that's coming to the fore. Dr. Reddy's is in the green, Coal India is in the green, as also Nestle. So pharma and FMCG, plus a very, very strong buying happening across the auto space, led by two-wheelers. So that's how the markets are structured as far as the stocks are concerned, and this is how we look at today's trade. At about 8:50, we'll wait for the pre-open markets to start somewhere like 9 or 10, but extreme profit booking was seen as far as the broader markets are concerned, and it was only stocks like Bombay Stock Exchange which showed an all-time high. There was an all-time high on Credit Access Grameen. This is a microfinance lender, and it was very ably discussed by Deepan Mehta, who was with us on Monday. Angel One as well as Jindal Saw were the also stocks that hit fresh record highs, and Kalpataru Power. This is one stock at 701, which is in blue sky territory. These are the stocks where dips are most likely to be purchased. Apart from that, stocks that hit a lot of 52-week highs were Ipca Labs. This was one of the top gainers in F&O on Monday, and let's see how the chart is structured as far as Ipca is concerned. At 998, you see a very, very strong move coming in. This is the highest since August of 2022, and it was a rally that came after 3 down days in the previous week. As far as Ipca is concerned, it was a gap up and very, very strong volumes coming in. 60 lakhs shares were traded on Monday, which is the highest since April of 27th. These are the stocks that need to be in focus. A lot of trades seem to be building up within the Nifty, and those are fairly well entrenched on the short side. The stocks that seem to be in a super bullish trend when it comes to the Nifty. Let me just share some of them with you. Just a moment, please. Okay, within the Nifty, you will see a lot of weakness coming into UPL, which was down 2.8% in yesterday's trade. 1 second, please. As also L&T, Mindtree, and HCL Tech as far as Tech Mahindra is concerned. So a lot of weakness creeping into the IT space. The index itself, the IT index, was down 2% at 30,848. This was down about 600 points. Let's just look at the Nifty IT index for a while, and this is 1 second. The software seems to be, yes. This is the lowest since 28th of August, and this is how weakness seems to be creeping in. Mr. Gaurang Shah, Senior Vice President, Geojit Financial Services, joins us. Good morning, Gaurang. How do you see the sentiment on Dalal Street? Lots of weakness creeping in across the board, but our foreign friends seem to have finally turned buyers. 2,000 crores worth of Indian shares purchased on Monday as well as Friday. What, according to you, lies ahead on Dalal Street?
Thank you, Shail. Morning. And I think more than the foreign friends, domestic relatives have done much better than what the foreigners have done. I guess on Monday, even the domestic institution had the positive side figure, if I recollect right. And despite of that, you saw 800 points correction on the Sensex, 200 points plus correction on the Nifty. Yesterday was a holiday on account of Vijay Dashmi, Dasera. This week, Thursday, we have the F&O expiry. Shail, I have a very strong feeling that this market is going to surprise you on the positive side. The reason why I say this is because we are very close to the August bottom. If you recollect, the entire month of August we spent consolidating between 19,200, 300 on the lower side and 19,500 and 19,600 on the higher side. We breached the low of 4th October, that was 19,350 or 60. And then we gave a close at 19,280 or thereabouts on Monday. I have a strong feeling that this market will surprise you on the upside this week, because tomorrow is the expiry. There may be choppiness and volatility, but I think that sacrosanct level of 19,200 bottom should hold out quite smartly.
Gaurang, both of us know that falls as well as jumps in the market are a part of the daily routine and the monthly routine. At 19,200, and the fact that US yields have calmed down a bit, the fact that crude is not above 95 or 100 seems to be some positives that Indian bulls should look at, and the fact that we've corrected very sharply from 20,200 to 19,250. According to you, what are the couple of stocks one should look at this level?
Well, at first go, Shail, I think I will definitely look at private banks. ICICI Bank being one of them. We saw the numbers on Saturday last week. Over the weekend, we had the numbers. A stellar set of numbers, Shail. Undeniably, this bank has been improving itself from the historical problems that it faced a couple of years back. We have a positive coverage on ICICI Bank. That's the first one. And second one being Mahindra and Mahindra. My sense, Shail, is that on fallback of the diversified portfolio product offering that they have, of course, with the JV as far as the EVs are concerned, new launch is going to definitely pick up steam. Utility vehicles, tractor, agri equipment is going absolutely strong in terms of numbers. And correction, despite of the almost 1,000-point correction from 2,200 to 19,250 shell, this stock has not corrected as much. So these two large cap would be, and the reason why I'm giving these large cap names, Shell, is because these are the times where you have to identify value creators and add them to your portfolio.
Yes, this is absolutely true, and one of the most stunning stocks that has given very, very decent returns is, of course, Mahindra and Mahindra. This is a stock which is consolidating near record highs, and no matter which side you look at, four-wheelers, whether it is Thar, Bolero, or XUV 700, that's showing a lot of traction, and of course tractor sales are doing extremely well. On the banking side, you mentioned ICICI, and on the auto space, Mahindra and Mahindra. Anything else in the wider universe where you would want to step in, Gaurang, or are mid caps and small caps still obscenely overvalued?
No, it depends where you hunt, Shell, to be very honest. And I think Monday's carnage has again reminded a lot of people that you need to be careful what you're buying in broader universe, and there are a lot of black holes which can suck you in case if you're not careful with your investment. So there are definitely values, Shell. I'm absolutely for the mid cap. Small cap is something that I would possibly be a little bit extra cautious, but in the mid cap universe, my sense would be that some of your mid cap IT names, again, on the earnings front, barring one or two mid-cap IT names, whatever we've seen and what remains to be seen will definitely give a very strong tailwind positive in terms of investment ideas. So if I would have to pick from the broader universe, I would pick mid-cap IT. One name that I can give out over there would be possibly Coforge. And if I have to pick one more name in the broader universe, then I would pick cement. And in the cement pack, you very well recollect, Shell, the levels from where we were recommending Dalmia Bharat to the levels where it is right now. We continue to remain positive on Dalmia Bharat. So two ideas, one from mid-cap IT, one from mid-cap cement.
Fair point. So Dalmia Bharat, Coforge, ICICI Bank and Mahindra are the stocks that Gaurang has at least on his radar in this kind of a downturn, and we'll definitely keep them on our radar as well. Gaurang, would you want to comment on this very sharp rise in gold prices?
Well, being a fundamental analyst, Shail, then of course, keeping in mind the principles of investment, diversification is something that one should definitely have in mind whenever you allocate your, investable capital. So you have to invest in equity, you have to invest in gold, PPF, bank FD, and if you have a larger or a deep pockets, then possibly real estate. But I mean, I won't go out over there because I have no idea about real estate. But the question that you asked, gold, remember, Shell, whenever geopolitical uncertainty to the extent that it has happened on 7th of October, even before that, 2 years back, we know Ukraine, Russia, and of course, during the pandemic also, uh, flight to safety is something that a lot of people have in mind when these kind of uncertainties come up. Uh, I have always been an advocate of allocating at least 10 to 20% of your total investment to gold related asset classes, be it in terms of physical gold, be it in terms of gold ETFs, or be it in terms of gold sovereign bonds. Gold will not give you return the way equity does, but over the last couple of years, I think every 3 to 5 years, gold doubles itself. From 56,500 before 7th of October, it has jumped to almost about 61,000 levels. I'm talking about 10 grams of gold. And the other fact is also, Shell, that gold is a natural commodity.
Right, sir.
Reserves across the globe, as far as raw gold is concerned, is going down. Operating expenses are going up, but the gold that is mined and what comes out of mining is of a little bit lower quality and lower volumes, but the operating expenses is always the same. So I would say that at least have 10 to 20% allocation towards gold.
Fair point. And let's look at pre-open trades. Milin Vasudev, the technical expert slated for today, will also be joining us. Gaurang, while you were talking eloquently about gold, we saw a 100-point dip on the Nifty in initial trades, and thankfully it seems that my green tie seems to be working, and so is Milin's light green background. So there is a there's a mild green tick on the Nifty, now flat at about 19,261, but it was really worse. We had seen 19,100 for a very brief second. But let's look at pre-open trades, and then we'll welcome Milin to this conversation. Okay, ladies and gentlemen, let's look at the index heavyweights first. I want to see what Reliance is doing. 1% lower, 2339. Next on the block is HDFC Bank, big boy, 1501, down minus 0.3%. Okay, Axis Bank is flat, 964. And how about ICICI Bank, 0.5% lower, 927. Okay, is there any kind of a green tick? Okay, ITC is in the green, and that's very nice. 0.1%, 436. Remember, this is the defensive part of the trade that's coming in. Nifty is back in the red, down about 17 points, 19,264. We'll happily live with this. There's no issue on this one. Let's look at how the FNO space is minus the index heavyweights. Okay, top gainers are, ladies and gentlemen, Delta Corp, 10% higher, 143. Again, these are initial trades. Let's see how they settle out. You have Motherson Sumi in the green, 2% higher. You have Escorts in the green, 1% higher, 3175. Remember, I'm talking about super high beta, and this is how stocks are at the moment. Bharti Airtel down 2%, 919. Bharat Forge down 2%, 1036. One very quick look at the NSE 500, and then we'll immediately shift focus to Milin. Top gainers in NSE 500. Okay, I see Tejas Networks 3.5% higher, 860. PNB Housing 3.1% higher, 743. CAT 3% higher, 2146. We'll let these rates settle down. The Nifty is down 75 at about 19,200. And these rates will settle down in about 3 minutes. Welcome, Milin, to Market today. What a pleasure to host you. Your view on the Nifty first, and a couple of stocks that you're looking at on the long or the short side within the broader market.
Good morning, Shail. If you see Nifty, now Nifty has started trading below the 50-day SMA. The 50-day SMA is at 19,650. And to be very precise, this 50-day MA is now falling. So we are seeing that there is a lot of weakness going ahead. And if you see, again, this level was earlier tested on 4th of October 23, and then this is the second time we are testing this level. So whenever a support is tested for more than twice, then it becomes little bit weak. If it tests for the first time, that means there is a good bounce back would be coming in. But at present, I feel that looking at the bearish candle on the daily chart, all pullbacks are likely to see selling pressure. So if we are opening little bit on the lower side, yes, then some pullback will come from this support level. But I think so that the gates for 19,000, say 19,000 to 18,900 levels are being open if we close below 19,200 levels. So 19,200 level now become a very, very important level going forward. On the stock front, I would recommend today. There are two stocks. One is on the long side and one is on the short side. So the first stock which I'm going to recommend is Ipca Lab. Ipca Lab is looking positive on the charts. And one second. Ipca Lab is looking positive on the stock. One second, my WhatsApp has gone a little bit.
Yeah, we'll raise the Ipca chart in front of you. It rose very sharply on Monday after a 3-day fall in the previous week, and the prices at 998 are the highest since July of 2022. Go ahead, Milin, please.
Yeah. So one can buy Ipca Lab at current levels. If you see Ipca Lab's chart, it is forming a strong base, and the stock is forming an accumulation pattern. One can keep a stop loss of 960 on the higher side. You could see the stock testing 1050, 1080 level. The second stock is Adani Power. One can sell Adani Power at current levels with a stop loss of say 330. On the lower side, you could see 280, 260 coming in a couple of days' time. So these are two stocks which I would recommend.
Fair point. And Adani Power at 316 is trading at its lowest level since September of 1st. Milin, we've drawn a long-term chart of the Bank Nifty in front of you. The index closed below 200-day DMA on Monday and at its lowest since 8th of May. Any view that you would hold on this index? Is it a falling knife, or are these levels around 200 DMA where you should nibble?
See, if you see
Okay. Gaurang, the view that you had discussed on private banks was that ICICI Bank looks good to you, and of course very, very strong numbers coming in over the weekend. Anything else within the private banking space that attracts your attention on the long side? How do you look at Axis Bank?
So, almost all the private sector banks amongst the listed universe shall feature in our coverage. Axis Bank too, we have, I think this week itself, maybe today or tomorrow, I'm not sure, but the numbers are likely to unfold for Axis Bank. 1140 to 1150, if I'm not mistaken, is the target, if my memory serves me right. And I'm quite sure that this second quarter numbers are going to be extremely exciting. And I think the entire provisions that need to be, or adjustments that need to be made as far as Citibank's business of credit card and retail acquisition is concerned, is already now become history. And I think somewhere close to about 950 or 960 where it closed on Monday, the stock looks quite attractively placed in case if you have a long-term time horizon. Numbers are today, tomorrow, so we will wait for the revision of targets and as far as what the bank has to tell us in terms of second quarter earnings share.
And pre-open trades have settled. The Nifty is in the green. Congratulations, Gaurang. And it seems that my totka is working. A green shirt with a deep green tie is what I chose today morning. Fearful for the fact that the last 1 hour of trade on Monday was really very difficult to go through. But such is life, and let's hope all the shots that have accumulated, seeing that very sharp rise, very sharp fall, now get extinguished in the first 1 hour of trade. And as Milleen had very rightly said, 19,200 is a very strong support. He's back with us. Milleen, your view on the Bank Nifty below 200 DMA, the low of May 8th in front of us. What would you do, sir?
See, clearly, if you see the Bank Nifty is underperforming the benchmark indices. Now Nifty is not trading below the 200-day moving average line, but Bank Nifty has already started moving below the 200-day moving average line. And currently, I would say that any bounce in this in the range of say 43 43 400 levels, one should use to go short on it. And on the lower side, I feel that it can go below the levels of 42 900, 42 800 levels in couple of days' time.
Okay, so this is how we look at the Bank Nifty according to Milleen. Since Milleen, you joined us after a week, between that day and now, ICICI Bank has come out with a stunning set of numbers, and at 200 DMA, the counter closed shop at about 929. How would you see this chart against the backdrop of a very strong financial performance, but a very weak, let's just say a weak chart?
See, one Bank Nifty starts becoming weak, even the results are good, but traders would definitely try to short all the banking stocks. Now, currently, if you see 919 is the crucial support for ICICI Bank, which is the 200-day moving average line. Once that has been broken, yes, you could see some kind of a weakness in this stock, and it can go below, say, somewhere around 900 to 880 levels. So one should not execute any long trade over here. However, some slight bounce back could be possible, but again, at higher levels, you could see some selling pressure.
Gaurang, coming to you, why do you see this kind of weakness creeping into the charts? And especially now, because the conflict in the Middle East is at least 3 weeks old. The bond yields are cooling, but suddenly, all of a sudden, on Monday, you see this very sharp sell-off, which seems to have unnerved at least some young bulls.
Rumor mongering is something that will always keep the markets on a hedge, Shail. And over the weekend, what kind of news we had as far as the Middle East situation is concerned, and the statement made by Israel, Lebanon, Iran, eagerly wanting to jump into this fire. And that was the kind of situation. And there was also the fact that on Monday we had Brent at $92 a barrel, which is currently at $88 a barrel. And NYMEX was also at about $88, $89 a barrel, which is today at about $83, $84 a barrel. That led to a little bit of, concern in the market. And moment you saw, crucial levels being broken, the bears came and hammered it down left, right, and center. That's what I'm trying to say, Shail, that the domestic and the FIs, that is, both of them had positive figure on Monday. Still, the market was down almost 800 plus point on Sensex, 200 plus points on the Nifty. So it was more of, domestic bears coming out and hammering the markets left, right, and center, especially the broader markets. All those names which ran up almost about 10, 15, 20% over the last week or fortnight. On Monday, they were down and out almost 10% lower freeze, if I'm not mistaken. So it was the broader market carnage which led to the spillover in the large cap and the correction that we saw. That's why in my opening remarks, Shell, I said that I at least I wouldn't be surprised if the market surprises all of us on the positive side. It's only that we have the expiry week tomorrow. So maybe today, tomorrow, you will have a little bit of choppiness, volatility. But like I mentioned, and I would repeat myself, I am hoping that 19,200 sacrosanct level of August lower level on Nifty spot. I think it will be extremely difficult for bears to break it and give you a close below 19,200 on the Nifty spot share.
Right. Right, and Gaurang, you are absolutely right. It seems to be working. At least the initial ticks on the Nifty are green, in line and in sync with the GIFT Nifty move. 45 points higher, 19,326. It's the Bank Nifty that's taking it away, very close to a double century. 190 higher at 43,345. Remember, we are on T-1. Tomorrow is the monthly expiry. A huge amount of shorts would have come in on Monday's close, and those are the shorts that are getting vacated as far as early trades are concerned. 19,322 in front of me. The first pivot level is 19,365. Let's see whether the Nifty is able to overcome that resistance or not. Very, very strong opening coming in here. Let's look at the index heavyweights in front of us. Without a doubt, HDFC Bank 0.2% higher, 1509. Let's look at Reliance, 0.2% higher, 2268. Let's look at Infosys, down 0.5%, 1402. But it's the banks that are taking it away. State Bank of India, about 1% higher, 557. Let's look at ICICI Bank, 0.3% higher, 932, bouncing strongly and smartly from its 200 DMA, as also Axis Bank, down 0.2%, 962. So strength coming in. ITC is in the green, 437.30, up 0.3%. How about Hindustan Unilever, in the green mildly, 2486, 0.3% higher. The Nifty holding fort, 43 points higher, 19,324. We'll take a very, very quick look at what's happening in F&O trades beyond the index heavyweights, especially high beta. Let's look at top gainers. Delta Corp, 6% higher, 138. India Bulls Housing Finance, 3.5% higher, 162.90. Remember, these are two super high beta stocks. MCX in the green, 2% higher, 22.55. RBL Bank, Hind Copper, Steel Authority, all gaining between 1.5% and 1.8%. It's the bulls that are taking away the market in the first 1 or 2 minutes of trade. Let's look at how long this lasts. Shifting focus to NSE 500 immediately. I have sugar stocks. So a bit of a sweetness creeping into the market during this festive season. Renuka Sugars, 50.2, up 4.5. Triveni Sugars, 368, up 4%. And of course, Balrampur was up in the futures space. What else is clicking in the green? KRBL, some changes in Basmati support level, 3% higher, 372. Let's immediately look at all-time highs. Nothing so far. 52-week, nothing so far. Okay, so markets have opened fairly well. Let's see whether they are able to sustain this move or not. Coming to you immediately, Milene, what do you see at the moment as far as trades are concerned? And your very, very quick view on the Nifty. Does 19,300 call for next week expiry make sense to you?
See, currently we are very close to the support level. So some kind of a bounce back is expected in the market. So yes, 19,300 call could be taken at current levels for next week. So I feel that some kind of a bounce is there in the market where Nifty can go towards 19,350, 19,400 levels. But at higher level again, there could be some kind of a selling pressure going forward.
Fair point, and this is what we've been advocating, that a sell on rise is an effective strategy. These are the first 10, 15, 20 minutes of trade where the shorts that were in place in the last hour of trade on Monday will now be covered, mainly on because we are on T-1, and of course people like to book profit and move the money into the bank from the book. Okay, all 19 indices that we track are in the green. The Nifty PSU Banking Index, of course, is the top performer, 1.9% higher, all 12 in the gaining list. Let's look at the broader advanced decline ratio. On the National Stock Exchange, 1500 shares are in the green, just 328 in the red. A very, very strong rebuttal from the bulls coming in on Dalal Street. On the NSE 500, about 400 stocks are in the green, 100 in the red. What are the stocks in the F&O space that are taking? It's the banks that are taking it away. Axis Bank reacting very strongly, 0.5% higher, 968.85. Coal India at day's high, 308 in front of me, up 0.7%. Tire stocks, Balkrishna Industries and Gaurang's current favorite, Coforge, 49.66, 1% higher. He had highlighted this stock in the mid cap space. I want to see what Ipca Labs is doing, and very quickly, where do I find it? At the drop of a hat as far as pharma is concerned. Okay, Ipca is not a part of the pharma index. Let me just see the F&O space. Okay, Ipca is trading flat at about 998. Let's see how it moves up. The second 5-minute candle on the Nifty is now green again. The first candle has a high of 19,340 and a low of 19,280. So any violation of this on either side will trigger a sharp move in that direction. What else is catching your fancy, Milene, on the long side as far as F&O is concerned?
See, Bharat Forge is one stock which is moving on the higher side. Yes, some kind of a pullback is possible because it is at a support level. But I would not advise to go long in this. But in intraday, yes, you could have a 10 or 20 rupees rise in this stock.
Fair point. So that is something what Milene is suggesting. A very, very sharp rally, Gaurang, is coming into the metal stocks. Within the Nifty, the top two gaining slots belong to Hindalco, 3% higher, 469.85. Tata Steel, 1.8% higher, 122.25. JSW Steel also gaining fresh ground, 1.5% higher, 760. So this is how the moves are. Your view that 19,200 should hold seems to be holding ground, at least in the first 7-10 minutes of trade. How do you see this opening?
So Shail, again, I normally refrain from giving short-term outlooks, but I think since the market has corrected the way it has, and since this is an opportunity, I would say that if we are able to maintain ourselves above the lows which was made on 4th of October, that is 19,350, I think it's about 25, 30 points away from where we are right now. I think if we are able to maintain about 19,350 for, a couple of hours, then you can possibly see shorts getting covered up. And if that leads a rally towards 19,400, then I think there will be a lot of short squeeze that will come into the market, which may propel the market on the higher side. So I'm just eagerly waiting to see we reach that level of 19,350 on the Nifty spot. And if we are able to maintain above that level for some time, then I think we should have an opportunity of shorts getting squeezed. This is purely a very short-term outlook, though I'm not an expert in that, but this is what my view is. And again, like I mentioned, since tomorrow is the expiry, tomorrow will be choppy, volatile. Being Friday, nobody would want to take any kind of extra long positions home. But coming next week, I think we should see some kind of recovery coming back into the markets.
Gaurang and Milin, all three of us have seen panic bottoms being set in the markets over the very long term. And since the sell-off was very, very sharp on Monday, I can't seem to stop referring to the last 1 hour of trade. Maybe that's in place, but only time will tell. But for the moment, 19,200 has been held. 19,300 is where the Nifty is. Up about 38. Bank Nifty is going strong. 134 higher at about 43,283. These are spaces which seem to be gaining some traction, whether it's short covering or whether it's long build up or whether it's bottom fishing. Only time will tell. But a green tick coming in the broader space as well, and the 2,000 crore rupees that our foreign friends seem to have invested on Monday and Friday seems to have working their magic. Coming to you, Milin, what according to you is the weakest stock in the Nifty and the strongest punt based on rollovers for the next month? Where are you concentrating your longs on, and where is your eye as far as the short trade within the Nifty stock futures space is concerned?
See, in the FNO space, if you see, Balkrishna Industry has shown significant strength going forward. Now, even in today's market, now it is up by 2%. It is clearly showing a higher top, higher bottom formation on the daily chart, and a 5-week consolidation. It is very much there to give a breakout. So I feel that Balkrishna Industry is one stock where one can try to put their money. On the higher side, yes, it is likely to test the levels of, say, somewhere around a new that is 2637 as well as 2650 levels in a couple of days' time.
Fair point. And we seem to have a thick red candle on the Nifty. This is the third 5-minute candle that's coming in. The low has been taken out, 19,280. So it was the first 10 minutes that the markets briefly enjoyed a green tick. Let's see how this shapes up, but it's not looking good. The low for Monday was 19,257. Let's see how the structures are, but for the moment it doesn't seem to be looking good. Balkrishna Industries, yes, this is a long trade that should work out pretty well according to you, according to Milin on the long side. 2605 is in front of us, and of course the stock is in its upper reaches as far as markets are concerned. This is the highest since you've seen in September 2001. So it's a 2-year high that's being taken out. That's the strength as far as charts are concerned on the long side on Balkrishna Industries. Remember, this is a specialist tire maker. Gaurang, would you share your views on Balkrishna Industries?
We do have coverage again from Shell, and more into truck and bus radial tires. And the product that they have is BKT tires. There was an issue as far as dumping from China was concerned in terms of cheap radial bus and truck tires. And I think that has taken care by the government. Countervailing duty, anti-dumping duty, import duty being increased. I think now the level playing field is in its place as far as this particular segment of tire manufacturing companies are concerned. Replacement market is going to be a huge market for the for Balkrishna Industries, especially given the kind of transportation activity happens by road and usage of trucks. New product launches by Tata Motors, Eicher Motors, M&M in form of commercial vehicles, stroke buses, will also throw in a demand push from the higher side on the higher side. Little bit of overhang in terms of crude oil prices, raw material cost input going up because for tire manufacturing companies, crude oil prices moving higher tends to be a little bit of dampener in terms of profit margin share. This is immediately from a short to medium term point of view. But long term, we remain optimistic on almost all the tire manufacturing companies.
And yes, amongst the auto ancillary space, a stock or a sector that's really shot up over the last 15 days has been tires. It was led by an absolute stunner of a performance from Seat Limited. And then we saw a lot of moves coming in from Apollo tires, record high on JK tires, record high on MRF tires. So that's how the structure is. And now Milene is promising us a wonderful November as far as Balkrishna Industries is concerned. Remember, this is one of the laggard stocks which did not do much well when you compare it with other F&O plays, especially MRF. But MRF is in 6 digits, and Balkrishna Industries now doing phenomenally well. Milene, staying with you as far as views on the broader markets are concerned, you talked about IPCA. Let's see the chart of IPCA at the moment. Remember, this was the top gaining stock on Monday, up about 6%, and it's likely to breach the 4-digit mark fairly soon, now at 9.189. What looks good to you on IPCA, Milene?
See, if you see, IPCA has made a bottom at somewhere around, say, 854, and then it rallied nearly to 921, made some consolidation and on the weekly chart, and then on Friday's trading session, on Monday's trading session, we saw a good price action with a gap up and a high volume. So this clearly suggests that there is good accumulation going on in this IPCA stock. So one can buy at current levels also, or on a decline up to 980 also. Keep a stop loss of 960 on the higher side. I expect this stock to test 1050, 1100 in couple of days time.
The other outperformer, Milene, is Hindalco, the top gainer on the Nifty, up 3.5%. It tested its 100 DMA yesterday. Overall structure remains fairly weak. Would you guess a move from now on Hindalco?
Say, I would not go long in Hindalco because again on Monday's trading session, it had fairly closed below the 50-day SMA, and a strong bear candle has taken place. Now, if you see for last 6 days, 4 days it is continuously falling, and it is maintaining a lower low formation. At present, some short covering is seen in Hindalco, but I would not advise to go long in this stock. Wait for some reversal at higher level and try to short the stock.
Okay. So that's a very clear view on bulls to stay away from Hindalco. Gaurang, one space that is tricking pretty well on the F&O space and broadly as well is the chemical fertilizer combo from Chambal Fertilizers, Tata Chemicals, GNFC, all these stocks doing pretty well. There is a bit of a burst coming in from UPL, although it's been a very sharp underperformer over the last 1 year within the Nifty itself. Any views that you would hold, any long-term stocks that look good to you at current levels within the fertilizer space?
So one name that I can speak about where we have a coverage is Coromandel International. Historically speaking, it was a south-based private sector fertilizer manufacturing company, but has found business strategy and put it in place, and now the footprints are spread pan-India share. So that is one particular stock that I can talk about. And in terms of specialty agrochemicals, which complement the urea stroke fertilizer sector. There are a couple of names, but if one name I have to highlight in the specialty agrochemicals, I think that would be PI Industries. Very strong performer in the sector, possibly an outperformer when you compare to the uh, peers of this particular sector when it comes to PI Industries.
Yes, and PI as well as Coromandel International have been one of those generational multi-baggers that long-term investors have in their portfolios. Coromandel International was at a record high 4 days ago, and PI seems to be having a dip towards its 200 DMA, 34.21 in front of me, and the all-time high on this counter has been about 4,000 rupees. Over to you, Mileen. The fertilizer space, where do you think lies long-term strength on the charts?
See, actually, I would see some trading bets in fact now. If you see, fact has gone up very sharply, and last 4 days it is just correcting on thinner volume. So it has got a good support at somewhere around say 650, 645, 635 levels. One can try to accumulate this stock, keep a stop loss of say 600. On the higher side, again, this stock has got potential. If Nifty starts going up, then this stock, which is having a higher relative strength, it would start performing, and then you could see the levels of again 700, 750 in couple of months' time.
Okay, so fact is the one which Mileen believes is running on strong stream. Remember the fact that it has a very low floating stock, and that's been one of the banes as far as the bigger players are concerned. But fact is what fact is in front of you, and Gaurang likes PI Industries, which is trading about 20-25% off its all-time high, and of course Coromandel International, very well known, very strong balance sheets over the last 20-25 years in PI and Coromandel International. So if fertilizer is your kick, then fundamentally it's PI Industries and Coromandel, and in terms of charts it's fact if you go by Mileen. Let's now drill down into the market. Again, we are at 936, and we seem to be for the moment holding 19301. Remember, there was a brief check of strength by the market on the Nifty. Yesterday's low, which is Monday's low of 19260, 258, 257, was tested, and for the moment that test seems to have held on the long side, 19304, and that's how the Nifty structured. Bank Nifty is up 153.43.301. This is a day ahead of the monthly FNO expiry. Remember, the Bank Nifty is down about 3.3% so far this month, and the Nifty is down 2% in the FNO October expiry. Let's again touch base with the NSE 500, and let's look at top gainers. These are stocks which were beaten down very badly over the last 2 or 3 sessions. Amber Enterprises to 2941. This is up 5.5%. Delta Corp up 4.5% at 136.25. Strong moves coming in sugar stocks, Renuka, Triveni, Balrampur Chini, and of course it's the metal rally which is led by Hindalco, Non-Ferrous, Tata Steel, JSW Steel, and Hindustan Copper. Fresh moves coming into high beta stocks like Tejas Networks 2.5% higher, 846. Defense, which was the cornerstone of the rally over the last 4 or 5 months, is in a bit of a pause. Midhani is down 1.7%, 388.60. Zentech is down. Zentech is up actually 1.9%, 691. Cochin Shipyard, the company that's headed for a stock split, is down 1% at 967. So broader markets, some pain, some gains, but this is how the structure of the market is as of now. Sugar stocks taking it away. Mileen, Any chart strengths that you see? Balrampur Chini 419 in front of you, 3.89% higher, day's high. What does it say?
See, currently Balrampur Chini is at very strong support zone of, say, somewhere around 400 levels, and currently it is trading at 418, and we are seeing a sharp bounce back in this stock. But yes, one can keep a stop loss of, say, somewhere around 400 on the higher side. If it manages to cross today 425 levels, then you could see some kind of a upside momentum towards 400 and say 450 to 456 levels. Now, there is one more stock, Shailji, which I would like to bring into your notice is Nucleus Software. Now, Nucleus Software has given a very, very strong breakout last week only, and still it is showing sign of strength. So our view on Nucleus Software is it is likely to head towards, say, I can give a long-term target on Nucleus is somewhere around 1800. So one can try to accumulate at current level, keep a stop loss, say somewhere around, say, 100 rupees on the lower side. But yes, this stock is looking very good on the longer term charts, and we are of the opinion that the stock is likely to head towards 1800 levels.
The elegance of your chart picking, Milene, is matched by the professionalism in picking an individual stock. Nucleus was one of the outperformers in this mid-cap IT rally that we've seen. And yes, fantastic numbers followed by actually very, very strong buybacks followed by fantastic numbers. And it's been one of those wealth creators that has adorned the mid-cap IT space. In fact, in our conversation with Gaurang early morning, we did discuss the IT space, and he mentioned Coforge as one of his top picks there. Gaurang, if you track Nucleus Software, any views that you would hold? I've been bullish on this from, say, 350, 400 rupee levels, and it's turned out to be a huge multi-bagger. Your view on Nucleus Software if you track it?
So again, since we don't have a coverage, this is not a recommendation, but going purely by the fact that mid-cap IT and some of the small cap names have attracted a lot of investment opportunity share. And purely if you see on the earnings front also, then some of these mid and small IT names have actually outperformed large cap boys. Even not only in terms of earnings, even when it comes to return on investment for an investor. So it's a very strong name, Nucleus Soft, but no specific comments since we don't have coverage.
Okay, that's a fair view to have. And the interesting part about the Nucleus chart is that the rally, the breakaway rally started somewhere on 17th of October, 2 days at least of two circuits, and then a bit of a consolidative phase. Today's low was 1400, the high is already 1500. So you know what Milene is talking about when it comes to what the structure of the chart is. Meanwhile, some good news coming in on Nifty. Now up 41 points, 19,323. Remember, the day's high is 19,335. So a test has happened on its way down of Monday's close. That's held. We see some kind of short covering in the market because we are on T-1 and tomorrow is the monthly expiry. Let's hope today's day is better in terms of how bulls are structured. But so far it's 9:43 now. So the first half an hour of trade, I would imagine, goes to the bulls, mainly on account of short covering. Let's see how the remaining hours are spent. But technically, intraday, it's the bulls that have a mild upper hand when it comes to the Nifty. Let's look at the top gaining stocks within the Nifty space, which are not from the metal side. and that would be, ladies and gentlemen, just a moment please. It's Pharma, Dr. Reddy, Kotak Bank 0.5% higher, IndusInd Bank 0.5% higher. Milleen, to you, IndusInd had shown a lot of strength coming in as far as markets are concerned, and there was a brief dip on Monday, 2.5% lower. How are the charts for the medium term structured as far as IndusInd Bank is concerned? I think Milleen. Okay, Gaurang, your view on IndusInd Bank?
So this also is one of the names on which we have coverage here. And I think the entire banking pack, we held a similar view, Shail, last financial year, this financial also, we believe that the credit demand is going to be extremely strong. Fundraising programs or pipelines has also been extremely strong, giving you an indication that the banks or NBFC's management do foresee a very prolonged period of credit demand. And the fact that the ability for the principal that has been given out as a loan, it coming back in form of parts being principal and interest, that is also improving. So that gives you a lower level of gross and net NPA, lower level of provisioning, and that gives the ability to improve your margins as well, profit margins, that is. So we remain positive on private banks, certain public sector banks, certain strong diversified NBFCs, housing finance companies, and more so, small stroke microfinance companies.
Okay, that's the view on IndusInd Bank. We seem to be having a good rally in the making, Gaurang, at about 19,320. Lots of nifty stocks showing strength, in particular Kotak, in particular Axis Bank, lots of strong moves coming on Bajaj Finance. So that's how the show is structured at the moment, and let's see how it goes here from now on. Time to shift focus and shift gears towards the corporate side of the market. With us is Mr. Vikas Goel. He's the Managing Director and Chief Executive Officer, PNB Guilds, joining us to discuss the performance of PNB Guilds. Mr. Goel, welcome to Business Today Television. Let's just go over with your numbers and then we'll begin to decipher them. Net sales are up 2.5% at 346 crores. This is up year on year. There is a downtick as far as profit is concerned, a loss of about 41 crores, and in comparison with a profit of about 13.5 crores. That's to do with how yields have moved. Mr. Goel, welcome, sir. Would you like to shed some light as to why profit fell, or why PNB Guilds posted a loss in the previous 3 months, sir?
Thank you for having me on your show. Yes, let's talk about the 2 quarters actually, because they're very contrasting quarters. So quarter 1, we had a profit of about 58 crores nearly, and quarter 2, as you said, we had a loss of 41 crores. Essentially, we are a trading house. We trade in fixed income securities. We are a primary dealer in fixed income securities, and we make markets in fixed income securities, support the government's borrowing program, and underwrite the government's borrowing program, the open market program. So we are very much exposed to interest rate risks. That is what we deal in, that is what we manage, and that is what we trade. Last quarter, so as any trading program, you need to have views. Our views were based on 2 outcomes. One was that inflation would be trending down. And second, as we went along deeper into the quarter, the talk about index inclusion, came to the fore. So these were the two basic views, that inflation would trend down and index inclusion would happen. Based on that view, we increased our commitment to the market. What really happened was that while the two events did happen, inflation started trending down and index inclusion did happen, but market behaved opposite of what it was supposed to behave. So the thinking in the market was on index inclusion, the news itself, and after the news, the market would rally, which means basically yields would come down. Actually, yields did went up nearly about 10 basis points after the announcement. Classic buy on rumor, sell on fact. And the second factor, Indian inflation gliding down, which also happened, but market chose to concentrate its attention on what was happening in US Treasury market, where the curve started flattening on speculation that Fed would be able to attain a soft landing or basically that neutral rate where inflation could be controlled without hurting growth. As a result, the inversion started getting reduced. The 10-2 inversion started getting reduced. Yields on 10 years started moving up. And our market chose to mimic what was happening in the US market. So net quarter on quarter, the 10-year yield, which is basically a benchmark for us, went up by nearly about 15 basis points, which is the reason why we had a suboptimal quarter two.
Okay, Mr. Goyal, you are the right person to talk about two or three points that have been highlighted in the Indian media as also in the global investing community. The entry of Indian bonds in the JP Morgan Asia Index. For a long-term watcher of this market, how do you see that helping Indian borrowers, especially the government of India, in terms of lower interest costs as also wider participation by foreign institutional investors into our bond market? How has this inclusion changed how global investors look at India?
So early days yet, but at least if I was to look into the future, 2-3 things are very evident. One, the kind of flows which will come in are the kind of flows which we need. It's not, so to speak, hot money, it's view agnostic. So whichever fund is passively benchmarking against the index will need to invest about 10%, which is our weight in the index now. So it won't depend upon the view, they will need to mimic the index. So that is one. So this is the kind of money, long-term money, which we need. Second, obviously, as the government focuses on doing the heavy lifting on the investment side, trying to crowd in private investment, its borrowing needs have increased tremendously. Therefore, getting a new set of investors to come in is important, or was important, and it continues to be important to keep overall cost of capital down in the country. Third thing is that this will essentially create space for or free up capital, let's put it this way, to invest in on the private side, because whatever was going into government bonds in terms of investing in government bonds, to the extent of these foreign flows will get freed up. So the crowding out effect which was happening in the Indian market in terms of capital deployment will be positively impacted as a result of this index inclusion. Third thing is, it obviously widens and deepens the market, introduces the Indian market to a new set of investors. Along with these passive guys, obviously the active guys will also come in. They've already started coming in anticipation of the passive flows starting in June, and this will only accelerate. So it is overall good news for India, for Indian bond markets, and for keeping cost of capital relatively low in this country, which will obviously aid growth in our country.
Right. Mr. Goyal, while inflation remains a stubborn fear as far as the US and a lot of other Western geographies are concerned, the RBI seems to have got a hold on it, and that's below the sub 5.5 level as far as Indian markets are concerned. Against that backdrop, would you share your views on the US 10-year, the Indian 10-year yield as far as the outlook is concerned over the next 6 months, this being the busy credit season for the industry?
So, two factors are there which will impact, if I was to simplify it in a rather complex situation, two factors are there. One, if you read the minutes of the recent MPC, it is very clear that Reserve Bank wants to keep liquidity constrained and rates elevated in the near future. And second is geopolitical risk has gone up, which if the current situation widens to include other West Asian countries, then it can impact oil prices negatively, which will impact obviously inflation negatively, and hence yields will get impacted negatively in terms of going up. So these two factors are at play currently, and I don't think that will change in the near future. So next 3 to 6 months, I think any possibility of rally in Indian bond markets, which means basically yields coming down, is fairly low. I think it will stay in a narrow range. So if I was to use the 10-year proxy, in all probability, it should stay in a range of 725 to 745 on the upper side, about 20 to 25 basis points for the next 3 to 6 months or next 2 quarters. So opportunities in the gilt markets for the next 2 quarters seem to be severely limited. One, because of geopolitical risks. Secondly, because of constrained monetary policy.
Fair point you mentioned, Mr. Goyal. The two other things I wanted to check your views are on, of course, the boil in crude oil, as also how safe haven buying is getting reflected in gold prices. Both of them have a very, very huge bearing on the Indian balance sheet, because these are the top two imports that we have. How do you see these two moving up over the next 6 months, given the geopolitical background that you talk about?
So what has really happened was this time around we have gone back to the traditional in terms of risk off. Right now it's risk off. So we have gone back to the traditional assets. Till about last year, Bitcoin seemed to be the risk off asset of choice. But we are back to gold and US Treasury. So essentially, there is a perfect storm in US Treasury. Yields had gone up in terms of particularly 10-year yields and duration yields had gone up. The belly of the curve in US Treasury had gone up. And that was because, like I said earlier, the anticipation of a soft landing. But now, because of increased geopolitical risk and flight to quality, gold and US Treasury seems to be a preferred asset class to park funds in for the time being, and to see this event in the Middle East play out. So I'm not an expert on gold, so I won't comment too much, but it looks like US Treasury yields seem to have peaked and they're coming down, which will again, like I said earlier, Indian bond market keeps on looking at what is happening to US Treasury. That will give us some room to get Indian yields also down, which is why I said 725 to 745. Currently, it's at nearly about 737, 738. So this 10-12 basis points move down and prices up can happen because US Treasury yields, after seeing 5%, currently at about 483, the 10-year. If it keeps on coming down because of flight to quality, it will help us also in terms of getting our yields down.
Right. Mr. Goel, my last question to you, sir, is the strategic pause that we are seeing in local interest rates engineered by the RBI since April? How do you see local rates moving over the next 1 year or so? The feeling in the market is that unless the US Federal Reserve cuts its rates or goes into a pause mode for a longer period of time, Mr. Shaktikanta Das would be constrained to keep local rates where they are. How do you see the interest cycle?
So two things. One, on the US side, FOMC is meeting, so 1st of November we will know. But in all probability, the bets are that they will be, again, status quo will be maintained. They will not be hiking. So higher for longer seems to be at play in US. And their jury is out because the Fed called it wrong on the sustainability of inflation. So some people are saying that the Fed may have over-tightened. So essentially the bets that they will stay longer for higher, some people are saying that that might not hold, as consumer-driven demand, which is feeding into US growth, might taper off really quickly as loans get repriced now. So if that is the case, that will give us room in India also not to stay higher for longer. And it will give Reserve Bank some room to reduce rates, assuming that inflation follows the trajectory which has been forecast by Reserve Bank. So essentially, if you are comfortable and we are prints below 5, though it is not expected as per Reserve Bank's forecast, then there will be room for Reserve Bank to start cutting earlier than expected. Presently, the expectation in the market is either the first quarter of next year or the second quarter of next year. Between first and second quarter is where we are talking in terms of Reserve Bank easing off. The Fed in all probability will move much quicker than that, maybe earlier in the calendar year.
Right. Mr. Goel, thank you so much for your wonderful views that you shared with our investors as also viewers. We hope to see a cut in interest rates that will further feed into the consumption-led rally that we see on the Indian economy as well as on the Indian markets. And here's wishing you all the best for a better quarters in the half year ahead as also in the full year. Thank you so much for your time, sir.
Thank you very much. Thank you for having me on your show.
It was our pleasure, sir. Let's take a very quick look at the market and then we'll wrap the show. The Nifty at 19,313 is 33 points higher. The 19,300 battle between the bulls and the bears on T-1 as also a day ahead of the rally seems to be in place, and the Nifty Bank at the moment is 0.5% higher, 43,332. Let's hope the green tick continues throughout the day, and the low that we've seen 19,252 is what the bears wanted, and from then on the rally is with the bulls. With that, we'll pause the show for a while, and please continue watching Business Today Television for all your needs on the news side of financial markets. Have a good day. Welcome to our special edition of Market Masters, where we get you to meet exceptional talent on Dalal Street as also globally. Our guest today is an individual who spent nearly 4 decades analyzing trends, buying stocks not only locally but also internationally. Let me introduce you to Mr. Ajit Dalal. He's the founder of Quantum Advisors, which is the sponsor of Quantum Asset Management Company. Mr. Dalal, it's indeed a pleasure and an honor to host you, sir, on Market Masters. It's rare to find people with this kind of an experience, both locally and globally, to grace our show. And I'm sure the next 20-25 minutes are going to be really exciting and a learning curve for not only our viewers.